The AI boom just created a $12 billion windfall for the company that nearly went bankrupt betting on tech. SoftBank, the Japanese conglomerate that lost $16 billion on WeWork and watched its vision fund collapse during the pandemic, just posted its fifth consecutive quarterly profit. The reason is a single investment that now dominates everything the company does, an 11% stake in OpenAI that ballooned in value by $26 billion in 3 months. This matters because SoftBank didn't buy this stake with cash it had sitting around. The company borrowed $40 billion, one of the largest corporate loans in history, to fund the investment. It's an unsecured bridge loan, meaning there's no collateral backing it. If OpenAI's valuation crashes, SoftBank is still on the hook. The loan matures in 12 months, and the interest payments alone run into the hundreds of millions. But Masayoshi Son, SoftBank's founder, placed the bet anyway. He committed $30 billion to OpenAI's latest funding round in February, then borrowed to cover it. Here's what actually happened. In March 2025, OpenAI raised $40 billion at a $300 billion valuation. SoftBank participated. By October, secondary market trades valued OpenAI at $500 billion. Then in February 2026, OpenAI closed a $110 billion funding round at a $730 billion pre-money valuation, the largest private funding round in history. By the end of March, when SoftBank closed its fiscal year, OpenAI's implied valuation had climbed to $852 billion. SoftBank's 11% stake, acquired for roughly $35 to $40 billion, was suddenly worth $80 billion. That $80 billion stake is still paper wealth. SoftBank can't sell it. OpenAI remains a private company with restrictions on who can buy shares and when. What SoftBank can do is mark the investment to market every quarter and book the gain as profit. The Vision Fund, SoftBank's investment arm, recorded a $46 billion gain for the fiscal year ending March 2026, almost entirely from OpenAI. The fourth quarter alone brought a $12 billion profit to the parent company. For context, that's larger than the annual GDP of dozens of countries. The tension is that this entire profit structure depends on one thing: OpenAI's valuation continuing to rise, or at least not collapsing. If OpenAI stumbles, if a competitor like Anthropic or Google pulls ahead, if regulation kneecaps the business model, if the company fails to turn its $14 billion annual loss into profit, SoftBank's gains evaporate. The debt, however, does not. SoftBank has taken on roughly $27 billion in new debt tied to OpenAI, including margin loans against its telecom unit and its stake in ARM Holdings. Credit rating agencies are watching. Moody's already downgraded SoftBank's debt twice in previous years when the Vision Fund imploded. Masayoshi Son has a history of spectacular wins and catastrophic losses. He lost $59 billion during the dot-com crash, still one of the largest single-person losses in financial history. He built SoftBank back by betting early on Alibaba, an investment that returned over $100 billion. Then came WeWork. SoftBank poured $16 billion into the co-working startup, which collapsed in 2019 after its IPO filing revealed years of losses and governance failures. Son admitted the investment was foolish. The Vision Fund posted a $23 billion quarterly loss in 2022. Now Son is betting everything on AI. The OpenAI stake represents more than half of the Vision Fund's value. SoftBank is also negotiating additional investments in AI infrastructure projects, including Oracle data centers and a proposed $100 billion AI venture in France. The company sold its NVIDIA stake, worth $5.8 billion, to help fund the OpenAI bet. Every decision is now subordinate to this single thesis: that OpenAI will become the dominant AI company of the next decade, and that its valuation will justify the debt load SoftBank is carrying to own a piece of it. The question isn't whether SoftBank is profitable today. It is, for 5 quarters running. The question is what happens when the loan comes due, or when OpenAI's next funding round prices the company lower, or when investors start demanding an IPO and real financial scrutiny replaces private market optimism. SoftBank has built a $12 billion quarterly profit on a valuation that has never been tested by public markets. The entire structure, the debt, the gains, the 5-quarter comeback story, rests on a number that a handful of private investors agreed to in a closed room. If that number changes, so does everything else.